Mohamed, let's talk about that. Let's start there. The signs of success that we're seeing that the Fed is having in this market through this week alone.
Yes, John, we have seen success. And if you want to go to a high level, what basically we averted is getting to a really nasty place in fast forward. What was that nasty place? A combination of a 1930s-like depression and a 2008 financial crisis. Why were we getting there in fast forward? Because financial markets were malfunctioning, amplifying the economic deleveraging, which was resulting in massive unemployment and high risk of bankruptcy. So we were heading to a very nasty place in fast forward. And the Fed last week and then this week, Congress and the White House together have provided some circuit breakers. But that doesn't mean we're out of the woods. And I think it's important to stress that. We have a really tough path ahead of us.
Just in terms of the signs you are seeing, though, Mohamed, to talk about the tough part in just a moment, the dollar weakness we've seen through much of this week, do you take that as a signal that the Fed is having some success?
So I take it as part of a signal. It's part of a very big puzzle, collage, if you like, of different things coming together. What I take most encouraging is the functioning of the Treasury market, the function of the investment grade market. Those have pivoted, have turned 180 from where they were early last week and the week before to where they are today. And when you stabilize the most senior part of the market's capital structure, then it tends to come down and stabilize other parts. It will stop. Certain elements will not be stabilized. The high risk, high credit risk in particular segments will still be problematic.
So, Mohamed, let's talk about some of the problems that you see that still exist. I think we're both on the same page. We've worked through some really messy technical issues, still in the process of working through them, but some signs of success nevertheless. The messy fundamentals, though, we still need to work through them. And I don't see how anyone can get a second half view without understanding the scope and the duration of this health crisis we're working through. And then you can't even get your hands around the depth of this specific downturn. Mohamed, what do you say to the people that are trying to game the recovery right now without really getting a deep understanding of the downturn before they do that?
I tell them, unless you are a very, very smart medical professional with perfect foresight, you should not be doing this. You're absolutely right. The duration and severity of the economic and financial disruptions are a function, first and foremost, of medical issues. And in particular, our collective confidence in three things. One, that through testing and other means, we can identify and contain the spread of the virus. Two, that we can treat the ill better. Three, that we can increase immunity. Until we see progress on these three issues, then the economic sudden stop will not be lifted. And I think we have to be very humble about our ability to predict what the world looks like in the immediate and in the post-crisis landscape during and after a sudden stop.